What's up, guys? Welcome back to my channel. So today Uber stock has jumped around 19% after its earnings release. And I look at their announcement. I saw it's because the company has first time generated a positive free cash flow, and it has been a big milestone since the inception of the company in 2009. So the company has been burning money to acquire users through the years, and currently it's finally are able to become self-funded and to make progress slowly towards its goal and reward back to its shareholders. So there are three takeaways from today's earnings release. The first one is that the supply side of the platform continued to improve, not just because of the higher incentive, but because of the higher demand, like driving by the market. As people are slowly going back to work and there's more transportation needed, and Uber can be one of their choices. And also I saw one of the analysts point out that the shared Uber product, which called Uber Pool or something, has been increasing comparing with other transportations. So that can be one of the drivers of its trips growth as well as its revenue growth. The second takeaways from the earnings is that it seems that the network effect has been taking off, and as the company announced, there's more than 10 million members of Uber One, which is the subscription model. Is $22 per month that the members can enjoy the benefits of the Uber rides, Uber Eats, and other perks. So that means those members would more likely to utilize more Uber products as they has already subscribed to the platform and they already adopt some of the products, and that would be likely to expand the company's profit margin. And the third takeaway is that the management mentioned that the company has not seen much impact from inflation, which is contrary from what most business has faced, like what we see after the earnings last week, which is the mixed results. Some retailers like Walmart has been quite steady in the past years, especially during the recession times. It has also seen the profits decrease. And in Uber's case, they are not being affected by either inflation or the potential recession. And I think that's probably because the company has a variety of the product line that they would provide to the customers. So in that case, they can have more revenue sources rather than a single revenue source. No matter in what economic circumstances, people all need transportation. It's a must for them to travel from point A to point B, no matter for work, for vacation, or for some other purpose. So, and also, I think even after pandemic, people still have the habit to get everything delivered. So Uber Eats has the ability to deliver not just food, groceries, and other variety of products, which has been satisfied the needs of the consumers, and so that trend will continue even after the pandemic. Oh, and another bullish sign is that I saw Uber's CEO has been buying the stock since last November. In last November last year, it has bought 200K shares, which is around $8 million. And in May this year, it has also bought 200K shares, which is around 5 million shares. So the stock price it has bought is around $44.26. So that means the average is around 30 something dollars. While I do think insider trading can give us a sign about whether its own management or employees has confidence to this company, but it cannot become the sole incident for us investors to make the decision, because we know that a lot of times even management bought the stock, they may suffer from the loss. And although we can see that there's something wrong with the market, but Mr. Market is always right. And that's just the battle between the bulls and bears. And I think we should have our own analysis rather than just looking at one single point. While I saw some analysts is very positive about the stock, like Morningstar analysts think the shares is very attractive, and it's given the fair value is $73, which means currently the stock is still undervalued after the stock rally today. But I also saw that some people are bearish about the company, as they say that the company hasn't turned positive in terms of GAAP EPS, and they concern about the profitability of the company, as the company hasn't taken into account one of the large portion is employee compensation, which is so the employee stock-based compensation is $470 million. And if we deduct those numbers from the cash flow from operation, which is $439 million, then the company is making a loss rather than the positive that we saw in today's earnings. So taking in the both bulls and bears, I think after the current stock rally today, the stock is probably gonna rise tomorrow, as there's more speculators gonna join in. I saw some crazy things that yesterday the stock Revlon, which has filed bankruptcy last month, because it has received like $1.4 billion for its bankruptcy loan, and the stock has rallied, I think, 80% yesterday, and also the highest, I think, it's more than 10% today. Although if we look at the S&P 500, the index, we didn't see much difference on the daily basis, but when we look at the individual stock, there's a lot of ups and downs, and a lot of people are doing day trading. The market can be very sensitive to any news, good or bad. So I think Uber can be one of the speculative growth stock that if the investors want to seeking for a higher return, but also it has the risk at the same time, probably due to a lot of uncertainties the company is facing, as it's been like more than 10 years and the company first turned profit, and the company hasn't had the GAAP earnings per share positive yet. So yeah, for any traders, investors, probably you guys want to keep that in mind. And for me, if I'm trading Uber stock, I would just trade it for a short time, like do it for day trading. In my opinion, short-term trading can be more safe in this volatile market. So yeah, that's all about Uber stock. Thank you guys for watching, and I will see you guys in my next one. Bye.